In these uncertain economic times, it's easy to be worried about protecting your wealth, your hard-earned savings, and your family's financial future. Plunging interest rates, the devaluating dollar, and political unrest constantly threaten what you have worked hard to earn and all that you own. That's why now it's more important than ever to protect your assets and have the money you need to make your dreams come true. Welcome to the Global Wealth Fortress Report with successful global entrepreneur and wealth preservation expert Joel Nagel. Joel's helped thousands of people just like you protect what you have so that you can make even more and make your every dream come true. So, sit back and enjoy Joel Nagel's offshore expert advice on how you can live the good life at a great price, where the sun never sets on your financial fortress.
Hi, this is Carib Clues, and I want to welcome you to Joel Nagel's Global Wealth Fortress Report, which has never been more timely. Ukraine, gas prices, pending food prices. How do you protect your assets against all that? Joel, what do we got to do?
Hey, Carter, it's good to be with you. I'm actually on the move myself, headed over to Europe, and I have a flight in about an hour. So this is good timing. It's kind of interesting to see the crowds picking back up on international flights. For a while, I felt like I was flying with the airline staff myself. So it's good to see people coming back to the flights. But of course, like you said,
you had a private jet. Did you feel like you had your own private jet?
You know, I think in the middle of COVID, there was a flight where I think there were 3 people in business class and there were 5 people in economy. So there were only 8 people on a giant, it was like a 767. And I think there were 14 staff. I mean, not counting pilots and co-pilots in the cockpit, but 14
Right.
Staff wandering around to take care of 8. I felt like I was on a very high-end cruise ship and I was being, very much pampered. But, like you say, it's amazing right now. It seems like the world is almost coming unglued every day. And you can look at it at the macro level. You talk about inflation rates and things like that. But, for me and for my clients, it's more about the micro level. What is it like when you go to the grocery store to buy food? What is it like when you want to travel? What is it like when you want to buy a car? And, I think the official inflation rate, something like 6-7%, somewhere like that. But, if you go to something like shadow statistics, you'll see that, that's absolutely not the case. I saw on the internet the other day, a guy was holding up a steak that he purchased at Costco. It had been in his freezer and then he bought one, 1 year later. And the one in his one hand was $21 and I don't remember how many cents. And the one in his other hand was $34. So, we're not talking about 7%. We're talking about 30%, probably at least.
I'm glad you mentioned shadow stats. That's John Williams, who I think is just fantastic. He puts it up close to 15%, almost double what the government's saying. Yeah. Which if you look at, I can believe.
And if you look at other indicators, for example, if you look at the price of gold, in recent days, because of Ukraine, it's spiked quite a bit because gold has historically been something that you move towards when there's strife in the world, right? It's a safe haven. We were talking last week a little bit about Bitcoin. Obviously, gold doesn't have the same volatility as something like Bitcoin, so it's really it's a store of assets. It's a store of wealth, and so normally it goes up in direct proportion to things like inflation, devaluation. The things that hurt your purchasing power, gold offsets it the other way. And if you look at gold over the last 4 months, I think 3-4 months, it's up it's up about 30%. So you can believe that it was trading in the 1600 range, and a few days ago it went over 2000. I think today it was around almost $2,100 for an ounce. So again, I've never been a gold bug and said, oh, go out and put all your money in gold because it doesn't generate dividends, it doesn't generate interest, things like that. But I think it does drive home the point that you do need to keep a certain portion of your wealth in something like gold. It doesn't have to be gold, right? It can be silver, it can be,
Right.
real estate, things that governments can't go out and just print out of thin air. You're going to see that those things, other commodities, before the show we were talking about wheat, we were talking about, I read something about copper. As all these things are going to go in direct relationship, as the dollar goes down in value, they're going to go up in value the other way. So, yeah, I mean, if you want to protect your purchasing power, you should have some exposure to these types of assets.
And I'm glad you mentioned these types of assets, because I just read this past week that for the first time in history, and you can tell me whether this has any impact on asset protection, but I read this past week that recently, for the first time in history, Russia and China both have more gold, actual gold reserves in the United States. I think Russia's up at 584. I mean, it's just unbelievable.
Yeah,
How does that
there's
impact
no
the value of gold?
Yeah, it certainly does. And for the last, 30, 40 years, the West have been net sellers of gold. And, India, China, Russia, they've all been net buyers of gold. And, I think there's a couple things at play here. One, there's the desire to create a monetary system that's not led by the US dollar, right? And not led by SWIFT. And recently, we punished Russia. We kicked them out of the SWIFT system. I think in the short run, Russia's going to feel a lot of pain because of that. But in the long run, it's going to make the SWIFT system, there will be viable alternatives to the SWIFT system, which means the SWIFT system is going to be less influential. The dollar is going to be less influential. I can't tell you that's going to happen today or tomorrow. In fact, in the moment, because of the crisis, the dollar has been increasing in value against a basket of currencies. I think it was up almost 50% against the ruble. It's been up, 6, 7, 8% against the euro. And that's the short-term sort of knee-jerk reaction to the conflict. But if we could fast forward somehow 10, 15, 20 years from now, I would suspect that, there will be multiple currency systems and the dollar will still be an important currency, but it's not going to be the world reserve currency the way it's been. So you see the Chinese and the Russians hoarding gold. You see them trading, doing their counter trade in each other's currencies, meaning the yuan and the ruble.
Right.
And that means they're just, they're going to systematically cut the dollar out of use from their perspective. And as the dollar's used less and less, its value will go down.
And you have a situation, just building exactly on what you're saying, of the relationship between Russia and China. You can build Iran in that, India, okay? Some of these Central American countries, I just did a piece for the Offshore Club talking about what I call the Humpty Dumpty factor. A lot of people don't realize Humpty Dumpty was actually based on a historical event. It's when they had at the 1648, the Battle of some place in England. They had their big cannon that would sit up on top of their wall and shoot at everybody out there. Okay. Well, they called it the Humpty Dumpty. It was huge. And one of their enemies just knocked the wall out from under it. And Humpty Dumpty had a great fall. Well, when we're out here shooting at all these other countries and freezing their assets and using dollar hegemony, based just exactly what you just said, sooner or later, it seems to me, and correct me if I'm wrong, you're the expert, that the other countries say, hey, then that's it, we're out of SWIFT. Hey, we're going to move away from the dollar's reserve currency. What's your opinion on that?
Well, yeah, I mean, I certainly don't wish the dollar or the SWIFT system any ill will. What do we expect to happen when we kick countries out of SWIFT? Do we think they're just going to shrivel up and go away? No, tomorrow they're going to wake up in the morning. They're going to figure out how to buy things, sell things, trade. And if it's not a question of them leaving SWIFT, it's a question of us kicking them out of SWIFT.
Yeah.
China has been preparing for this for quite a while. They started an alternate system called CHIPS. Even the Brits joined it. Countries like Iran have been, North Korea, they've been locked out of SWIFT. So what choices do they have? They're going to look for other ways to trade, and they're going to look for other systems. And, the more we use the dollar system in the short run to punish people, in the long run, it will become less and less effective. I believe that's true. if you couple that with massive money printing, which we've been doing, because of COVID and because of, our own economic problems, over time, the dollar is certainly going to be worth less. I tell you all the time, I'm not an investment advisor. I'm not telling people what to invest in. But, look at something like the U.S., the 30-year U.S. Treasury. I mean, the interest rate on it's like little over 2%. So somebody's going to take your money and pay you 2% a year to hold it for 30 years. I mean, I can't think of a worse bet ever. You are guaranteed to lose your money. It's not, you're not going to lose it quickly. You're going to lose it slowly. It's death of 1,000 cuts. If anybody thinks the dollar is going to be worth more in 30 years than it is now, they really need psychiatric care. So, that's kind of where we are right now. And I think everybody should be thinking of ways to protect their purchasing power and make sure that whatever strategy they come up with, they should really be thinking about it not from an investment standpoint, but from an asset protection standpoint. Those are slightly different. Some investments do really well and keep you up with inflation, but at the end of the day, asset protection isn't about trying to time the markets. It's not about what's the hottest stock. It's not about any of those things. It's about what can I do with my money to make sure it's going to retain the purchasing power I had when I earned the money and I put it in that asset class in the first place. And you're basically talking about things that are limited in nature, limited in scope. Gold, it has a certain finite amount of gold in the world, and if you want to buy it, you'll always pay more over time to buy it than you did in the past. 100 years ago, an ounce of gold cost $20. 100 years later, it costs $2,000. So did the price of gold go up? I would say absolutely not. The price of gold stayed the same. The dollar went down.
Right.
That's
right.
really what's happening.
And so with the idea of 2% return on the bonds at a time when you have 7.5% inflation,
Exactly.
I'm not much of a mathematician, but that sounds like a losing proposition to me.
It is a losing proposition. You might as well just, when you do your taxes at the end, there's a great line at the bottom. After you've calculated all the tax you owe and all the different ways you have to pay more and more and more tax, there's actually a line at the bottom of the tax return that allows you to, donate extra money to the Treasury and to the IRS. And I feel like when you're buying a 30-year bond, that's what you're doing. You're donating your blood, sweat, and equity to the government, because whatever you get back, even if it's paid with nominal interest of 2%, it's not going to be anywhere close to what it was when you gave it to the government to begin with.
There's just no way. Do you ever, I know you don't recommend on investments, but in terms of asset protection, how about offshore property?
Yeah, I mean, property in general, but I do like offshore property because it's, again, the property in the United States to a certain extent is controlled by the US dollar. And when you buy property outside the States, it's not really going to be controlled by the dollar, but it is, again, it's a finite asset versus an infinite asset. I'll give you a quick story. I was with my good friend Steve Sugarrood in Buenos Aires, Argentina, back in the early 2000s. In fact, I think it was 2000, 2001. And the Argentine peso at the time was pegged 1-to-1 to the US dollar. And literally, while we were there, the government ended the peg. It was an artificial peg. And overnight, the peso went from 1-to-1 to 3-to-1. So all of a sudden, for local Argentinians, everything became 3 times more expensive. And for me, it became 1/3 the cost, right? Because if I was paying for a hotel and, I was paying, 300 pesos, yesterday that was $300 and today that's $100. So for me, everything got cheaper. For locals, it got more expensive. But I noticed in the case of real estate, which is priced in pesos, what happened the day that they did that, all the costs of real estate, particularly nice real estate that international people would want to buy, they just tripled the price.
Wow.
So the peso went down, 2/3, and the price went up 300%. And at the end of the day, you had to essentially pay the same value for that property before and after the devaluation. So if you were an Argentine, would you want to have, a million pesos in the bank, or would you want to have a property worth a million pesos? And, the answer is the second, because, the next day, instead of being worth 1 million pesos, it worth 3 million pesos. And now it's something like, I don't know, 80 pesos to the dollar. And if you own that same property, I'm sure, instead of 1 million, it'd be 80 million. So
Right.
that just shows you that, real estate is an asset class that is great from an asset protection perspective. And I'm not talking about any particular property. I'm just talking about property in general. If you
Right.
have a great beachfront property, it may appreciate more. If you have property in a good area, of Buenos Aires, it may appreciate more, because things that are rare and sought after are always going to increase more. But this could just be some average, piece of property anywhere. It would have gone up. It would have kept up, at least with the devaluation of the peso. And that's what I see happening in the U.S. too. It's obviously happening at a slower pace, but to me, inflation and devaluation, it's two sides of the same coin, really. It makes your money and your purchasing power worth less.
Well, I always tell people that when it comes to property, as we're discussing, two things. One is what Mark Twain said. He always said, invest in property because they can't make more of it, which is
Exactly.
a great statement. And the other is, I remind folks, and this is both sides, whether it's for investment or asset protection, there is no place in all of Central America. You were talking about the value of different types of property. Joel, there's no place in Central America that is more than 125 miles away from beachfront. It's incredible.
That is.
That's
There's
incredible.
places in places like in Panama where they have mountain ridges where you can look one way and see the Pacific, and the other way and see the Atlantic. And the sun rises over one and sets over the other, and you see the oceans all day long. So, you're absolutely right about that. It's a good place. I mean, again, I wouldn't try to time markets, but I
Yeah.
think it's more longer term trends. And particularly if you think you would enjoy spending time and living in these countries, then it makes even more sense, right? I'm going to live there. I'm going to take advantage of the lower cost of living, the high quality of life. And, some point maybe in the future, if I don't want to live there anymore, or when I pass away and I leave the asset to my children, they're going to have an asset that will have kept up with value. It'll probably, hopefully, if I picked a good property, it will have increased in value, not in nominal terms, which is the way most people, if you bought a home 30 years ago and now it's worth twice what you paid for it, did you really make a gain? I would say no. You probably lost money. You're happy that it went up double, but in real purchasing power, it struggled to keep up with inflation, right? Because if 30 years ago you bought an ounce of gold, it's 5 times what it was 30 years
Okay.
ago. So you
Okay.
have to kind of look at it from multiple perspectives. But if you pick a good property, and I think many places in Central America are still undervalued. So yes, I think you can find some really phenomenal values, and you're going to get nominal increase and real increase as the area becomes more sought after.
So in this turbulent time, and we're running low on time here, but in this turbulent time, we've got just, to a certain extent, I've never seen anything quite like we have today. I mean,
No,
the world's it's turned upside down.
it really is.
Yeah. So you've got gold. You're saying asset protection, gold and silver, asset protection, perhaps property, and perhaps looking very closely at offshore property. Give us one other recommendation for when your clients are coming now that you say, look, you got to protect some assets here.
Yeah, I think you can't talk about asset protection anymore without talking about crypto. And I know crypto is not for everyone, and it's volatile. I understand all those things, but you have people leaving Ukraine, for example. They were told they can't leave with more than some ridiculously low amount, like $200 in cash, and they can't carry more than that with them. So you have people who are leaving with nothing, and you have people who are leaving with their Bitcoin in their in their computer. And I think it's going to make a huge difference to the ones that show up in the West that that have crypto and don't. If you have gold, if you have diamonds, all those things are physical and they can be taken away from you. But as one of my friends in the crypto space said, Bitcoin's the one asset class that you can carry around in your brain, because as long as you know your seed phrase and your access passwords, you can literally walk away from everything you own, go somewhere else, log into a computer, download your Bitcoin, and you're back in business. So again, I understand all the challenges and problems with it, and I'm not saying it's the only asset class you should have for asset protection. I love real estate. I love gold. I love different types of currencies like the Swiss franc. I love investing in real businesses because, again, as inflation hits people, businesses, what do? They just raise their price. So if you have a great business, great stocks, those things are going to keep pace with inflation. Bonds will not keep pace with inflation. Government bonds, particularly so. Cash, putting money in a bank account. I mean, if you put your money in your bank, you're making your bank wealthy. You're not making yourself wealthy. I mean, I've never seen a bigger negative spread between real inflation and interest rates, right? I mean,
Right.
you said inflation somewhere between officially 6-7%, unofficially maybe 12-15%, and the bank's going to give you 0.3% if you open up a CD. So again, you're guaranteed to lose. The only people who are making money out of that deal are the banks. So you really have to think about ways that that aren't benefiting banks and insurance companies, but are going to benefit you and your family, and that's what asset protection planning is really all about. It's we've been talking about the investment side. Obviously, there's the legal side, trusts and companies and foundations and all of that. But to really keep up with inflation, you have to do both. You have to create the right kind of structure, and you have to marry it to the right types of investments that can withstand the the tests of time. And right now we're in a pretty big test. So it's going to change a lot, the winners and the losers, in terms of the haves and the have-nots.
Incredible. Joel, fantastic as usual, folks. This is America's #1 asset protection attorney. As you can tell from the past 20 minutes, go to Nagel Law. There we go. Our super producer Gary and I had the same thought at the same time. Go to nagellaw.com. More information there. Get hold of Joel. This is literally priceless information. Joel, I know you got a plane to catch. Thank you.
Thank you. Thanks for having me. Maybe next week we can get into some of the ancillary things, artwork. You guys were talking about baseball cards. Those are all great asset protection investments as well.
All right. Thank you, sir, for joining us. It's been great.
Thank you. Have a good week.
I appreciate it. Thank you. Folks, that's literally priceless information. You got some of the same advice that America's #1 asset protection attorney gives to his top clients. I'm talking top clients. You got it for not a fraction of the price they pay. You got it for free. Make use of it. I urge you. Make use of it. Come back next week when Joe will fill us in on any more information, baseball cards and artwork. Let's do this thing. Thanks for joining us.